Welcome back, everybody, to Andy the Baker Show. This episode's gonna be a little bit different than my typical episode, as you can kind of see from the version that it's here. What I wanted to discuss today was something that is not directly related to the stock market, but somewhat related. All right, I'm gonna post my typical portfolio, how it's doing this month, and I'm gonna be very honest with you. This month has not been a good month. It's my portfolio is down basically like 7%. And there's two things I'm thinking that's leading to that. All right. The very first thing is the jobs report. All right. The jobs report has gone up. We've added 256,000 new jobs in the United States. Our unemployment is at a 4.1%. And because of that, the stock market has gone down. Now, most people would be thinking, like, Andy, that doesn't make sense. Like, we added more jobs. We now have more people that have disposable income. Why is that a bad news? And it's not. It really is not. I'm not selling out of my stock portfolio because of that. However, one of the things that is confusing for newer investors is this term we have in this investing world called good news is bad news. And that's currently what's happening right now. And the reason why I believe that good news is bad news, or at least why I interpret the market moves as that, is because when the job market is high, there is more jobs being created, unemployment is low. That means more people are buying more things, leading to a higher inflation. And that's one of the biggest thing that the Federal Reserve is worried about right now, the inflation part. And if inflation keeps on going higher, they will have to go ahead and increase the federal funds rate, which has big impacts on the stock market because it makes borrowing costs for investment companies a lot harder. Not only that, stocks will have to compete with other type of assets such as bonds, such as your typical money market savings account or certificate deposit in a regular bank. So because of that, there's more competition, makes the stock market lower. I am still invested into the stock market. I will keep on buying. There is no such thing as selling for me, at least not anytime soon, because I'm investing for the next 40, 50, 60 years. I'm a long-term investor here. Now, the second big news that occurred was regarding the Los Angeles fires. It's very unfortunate what's happened. And in case you guys are not aware, there's a ton of wildfire that had started in Los Angeles that essentially took out basically certain neighborhoods off the map. Like, for example, you got a city called Pacific Palisades. A day ago, it was a regular city, and then after the fire, literally in a single day, you guys, it's burned down to rubble and ashes. I mean, I've never seen anything like it like that, especially that fast. I was like, wow, that was surprising. Now, why is that such a big deal? All right, we got a couple issues going on here. One is the insurance premiums. All right, the fire insurance in that area, the premiums will have to go higher. What that means is that people that want to buy a home, they'll have to spend more. And if there is less people with disposable income, that can affect the stock market. All right, that's one thing. The second thing about that is higher inflation fears. One of the worries I got with you guys is if some of the people want to relocate, that costs a lot of money. They'll need to liquidate their assets, essentially sell stocks, these wealthy people, right? That would be bad for shareholders. Or the second thing is that they rebuild, which is still going to cost a lot of money. They'll have to get some liquid assets, liquid cash. Where are they going to get it? Most likely, if I was in their situation, I just lost my phone, I'd have to sell some stocks to help with the rebuilding process. And the issue with that is that a lot of these homes are going to be rebuilt at basically the same exact time. All right. So what that leads to, in my thinking at least, is that more and more resources being demanded at the exact same time. When demand goes higher, higher inflation again. That is a worry that I have. And when we have higher inflation, the worry is what the Federal Reserve would do, right? Because if they increase the federal funds rate, again, that makes it harder for businesses to borrow money. And not only that, it makes it more competition for stocks, because then not everybody has to go into stocks. Some people are fine getting a 5% yield on a savings account or 5% yield on a certificate deposit or bonds. They're happy with that. Now, December has also been an interesting month because the 10-year notes have been going higher. In December, the federal funds have gone down by 25 basis points. All right. With that being said, the 10-year note is moving in the opposite direction, which is normal. It is normal to not have an inverted yield curve, where the longer you put your money, the higher the yield you would get. That is completely normal. But when you have a 10-year notes, when the yield for those are going to be around a 4.7, if it's 4.7, that I'm expecting the mortgage rates to be around a 6.7. I'm expecting like a 200 base increase or 2% more than the 10-year notes. And because of that, when you have high home prices, you have higher insurance premiums coming up, right? You have the mortgage rates close to a 7%. Now, when you got all three at the same time, that's like a triple whammy. I don't know. I don't know how people that are Gen Z are going to be able to afford these homes. That's a very, very interesting thing to see and look into. Now, with that all being said, what am I gonna do with my portfolio? Right? I'm a little bit cautious at this current moment because I do think the stock market could come down a little bit more. There could be more of a correction, or a bear market could actually come into play. And this is unique because I'm usually always bullish on the stock market, but this is one of those cases where I'm actually a little bit fearful of the stock market. With that being said, I'm not selling out, you guys. I'm not selling out. I'm gonna be holding, and whenever I can buy, I'm gonna try to buy as much as I can. I am building a little bit of cash reserves currently right now because of the LA issue, so I do need a little bit of the liquidity. But besides that, as always, long term, I'm always bullish, but on the short term, I'm just a little bit cautious, a little bit bearish because of everything that's going on. And with that, you guys, I'll see you guys on the next episode. Thank you so much for watching.